Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum webinar, where every morning, 10:30 in the UAE, we take a quick reflection on where the markets have opened in Asia and where the direction of travel may be through the day. Let's kick off in Singapore with Leo Tameeris, CEO of NRG Global. Leo, we've just had in recent days the numbers out of China, and it looks like oil imports, oil buying in China remained very strong in November, kind of returning close to the highs that we saw earlier in the year.
Yes, indeed. Back to 11 million barrels a day. We saw a slight downwards in October, but that was just over 10, so they're still not bad. Yeah, the demand in China continues to be very, very strong. And that's on top of all the floating storage that the floating vessels that were imported in the meantime already. There's almost nothing left of that. So it's all newly shipped, newly purchased. The refineries are running at good rates. There is some product exports, which shows that not all the products are finding a home in the domestic market, but it looks very, very strong indeed, and the outlook is still that it won't come down from here.
The outlook for the new year, of course, the prices have now are incrementally higher than they have been, let's say, over most of the last 6 months, in which China did a lot of buying on the back of those cheap prices. Do you think these higher prices, obviously not massive, they're still below 50, but do you think they might curtail China's buying a bit?
I think if the prices would stay at the levels where they are now, or move up further, then that would curtail the buying. But it looks like they're expecting that the prices will go down and continue to import because the demand is there. The demand is there in China, so they will need oil. But there's still a massive oil in storage, of course, so they can eat into that for a while with lower imports if they don't like the prices. But the refining industry in China continues to do very, very well.
Okay, well, let's leapfrog 8-hour time zones and go to Adi Imsirovic, Senior Research Fellow at the Oxford Institute for Energy Studies. Adi, sitting in London, the markets in Asia, of course, have opened this morning down a little bit. The sort of euphoria of the OPEC decision may be running out of steam a little bit. What's your take of the OPEC decision and its impact on the markets going forward?
Good morning, Sean. Good morning, everyone. It's still pretty dark here. It's night. Caught up with the news a little bit over a coffee, and but back to OPEC. I think it was a very, very good agreement for OPEC Plus. I think it was also a very smart agreement for OPEC Plus. Having these regular monthly meetings actually gives them a fair bit of flexibility to adjust to the demand. Or if you look at the history of OPEC, it's always been a problem when they were trying to defend something and fix something. And I think they've learned over time that having flexibility and actually slowly adjusting to the market needs is probably the best way to go. In terms of the market, I agree with you.
But just on that point, Adi, are you not overlooking what were some very obvious fractures last week that have hardly gone away overnight?
Absolutely, and they will not go away overnight. Definitely, I think if you want to twist my arm and say where they're going, I think OPEC at the moment OPEC Plus, is torn between two forces. On the upside, every time we go over roughly $45 WTI, you will see forward hedging and shale coming back, and that's a whole discussion we can have if you wish. We see rigs up. We have seen evidence of shale producers already hedging forward and production slowly creeping up. And I think within 6 months, you'll probably see a lot more of that, assuming these prices. So that's on the upside. And on the downside, I think that the events of April are still pretty fresh in the minds of all of us. And I think they're very, very strong incentive not to do anything silly and just go with the flow, i.e. go with the agreement and the Saudi initiative to keep this going. So, you know, there will be in between these two things, there will always be some tensions. But if you want a positive side, I just saw literally just now, I think it was Energy Intelligence came out with the news that actually compliance from Iraq and Nigeria was very, very good in November. And actually overall compliance for OPEC Plus has been 108%. So, you know, we saw ADNOC news, ADNOC cutting 20%. So, you know, there are all the positive signs at the moment.
They've certainly had enough of that with the sentiment as well, obviously from the point of view of the vaccine. 108% though, that's a little odd. It would sort of tell you that maybe some pump broke down somewhere for a few days. Laury Haytayan, MENA Director, Natural Resource Governance Institute. Need an acronym there. Let's come up with an acronym for that. Laury, the surprise of last week, ultimately, in the context of this neighborhood at least, was that the reporting indicated that the UAE was the problem child, or the one that was kind of sort of banging the table a little bit and looking for you know, some, you know, different ideas. I'm wondering what your thoughts are about that in the context of the regional geopolitical picture, and does it indicate anything to you that this is not a fixed problem, but it could reemerge?
So for the acronym, actually, we call ourselves NRGI. So you can say that if you want going forward. So I think it's very interesting what's happening with the UAE. I think my reading first was that the UAE was not very happy with Jared Kushner's presence in the region, and with this, they were saying that there might be a rapprochement between the Saudis and the Qataris. I think the UAE was not very happy with that. They don't want that to happen now, and they have other plans for the region. So maybe it could have been something that was reflected in their position in OPEC, you know, because it's always politics with energy markets. It's all mixed sometimes, and the positions that you take. But I guess going forward, it is that everybody should comply. Everybody should not complain when we are in such a situation. You know that Nigeria was trying to get away with some classification of its crude, condensate, etc., so that it can pump more. Others, like the Iraqis, 1 minute they wanted to stay in OPEC, the other they wanted to leave. So I think the UAE were frustrated because they want to pump more and they have plans for themselves, but at the same time they want to stick to the OPEC plan and OPEC plus plans because we still need this discipline. So I think this will continue. And every 1 month we'll have someone that is pushing in different directions, but prudently optimistic, being OPEC plus, or they're being prudently optimistic, like wishing that everything will be okay, but they need like every month now to monitor the situation. So I think I don't think there will be much change in January when they meet, but I think February will be another situation, because then we will know what happened with the new year. And if there are increases in COVID because of Christmas and New Year, and what will happen then? So I think this is like January.
It's hard to believe that
February might be a problem.
We're already looking at a January 4th OPEC meeting, which seems enough to make your Christmas turkey a little bit stuck in your throat, maybe. But Leo, back to the good land of good stories and positive vibes, Asia. Beyond China, is there a similar outlook for the region? I know the Chinese have been struggling with their exports of products to the region. What does that tell us, do you think, about regional demand going forward?
Well, I think the demand in the region is more of a problem than it is in China. There is a glut of products on the waters being exported out of China, out of South Korea, and other countries. I mean, Japan is importing I mean, if we look at refining margins in Singapore are below $1 a barrel. On a long-term average, they would be more around $5 a barrel. So that shows you that there is a glut of products in the market that needs to find a home. And as we saw a few weeks ago, maybe China taking maiden voyages of VLCCs coming off the wharf with product back into Europe to ease the glut.
I mean, there's not only a glut in products, but there's actually a glut in refineries, isn't there? I mean, ultimately, we've got to see some refineries actually mothballed.
Well, exactly, and we are seeing that. I mean, Shell a few weeks ago announced that they are restructuring the Bukom refinery here in Singapore, which basically means they're taking capacity off the market. They shut down the Philippines refinery. You see permanent closures in Japan, in Australia, New Zealand. So outside China, in the rest of Asia, refining capacity is getting reduced.
And these assets cannot be sold. Why can't they be sold?
Well, they are transformed into storage. So that's what Shell did in Batangas in the refinery. They changed that into an import storage. Even Japan, they just took 3.5 million barrels out of his Ineos refinery in the south and gave that to Kuwait Petroleum for crude oil storage.
But yet we've got 1.5 million barrels of new refining capacity coming into China next year. Is there a market to absorb that?
I think inside China, the domestic market in China will absorb that. There's no doubt. We see short-term hiccups as in the form of product exports out of China, but long-term, I think the markets in China is strong enough to absorb that.
Adi, looking again back at OPEC deal, 500,000 barrels a month, or at least for 1 month, with a meeting again on January 4th, again, a monthly review structure. 2 questions on that. Do they have the technical ability to manage that on a monthly basis? And conversely, can the market absorb that kind of adjustment on a monthly basis?
Yeah, that's a really good question, Sean. The way they've been discussing this already, it's been sort of questioned because obviously January allocations are out already. So, and they're meeting in January, really, that should be for March and almost even April allocation. So, but I think given that 500 roughly means about 125 for Russia and Saudi Arabia, I think both countries, particularly Saudi Arabia, have very good operational tolerance within those numbers. So I don't think it's going to be the problem for the two. In terms of the market absorbing that volume, I think that shouldn't be a problem either. I mean, it's just it's always in market terms, it's at a price. What price that's going to be, we'll have to find out. Certainly, market going forward now is looking very, very good. As Leo pointed out about China, over 11 million barrels of imports in November is huge. Now, I would expect that those imports in December to go down probably quite a bit, almost as much as 1 million barrels, because actually, if not more, because the teapot didn't have the quota for the imports for the rest of the year. But then they'll pick up in January again, so there's a bit of a bump there. Demand continues very strong, as Leo said, and market certainly is looking very, very good. A lot of floating storage has been taken care of. At a price, the market will absorb those levels. I think what is important for OPEC Plus is just to keep that front of the market fairly tight. I think for OPEC Plus, it'll be very, very difficult to get the back end of the market moving very high. And they probably don't want to do that. They just want backwardation, because as soon as the back end of the market picks up, you will see shale reviving. Whereas at the front end of the market, they can just control that picture and keep stocks low, which is the most important thing for OPEC Plus.
If you look at that structurally, the decision coming so late in the quarter, just obviously last week, some countries would have already allocated for January and maybe well ahead of the agreed number, because they may have been judging on the fact that they were going to have a 2 million barrel a day increase in January. Typically Oman and the UAE, Abu Dhabi would have been allocating well ahead of the curve. So I'm wondering, how do you see the mechanics of all of that working out in January, February?
Well, as I said, the original proposal, I think they came up with a cut, rolling the cut of 2+ million would have been very, very difficult, if not impossible. With the 500 increase, I don't think, especially given that it's going to be prorated, i.e. Saudis and Russians will get most of it, I don't think it's going to be much of a problem, particularly Saudi Arabia has also huge amount of storage capacity. They can easily absorb it, buffer it, load it cross-month. You can almost get it through operational tolerance and 10 million barrels a day. So I don't think that's going to be a problem.
Right.
Going forward, it might be a problem, but just coming back a little bit, step back on your question again with OPEC Plus, it really, I honestly think it's a very, very good agreement for OPEC Plus, because that flexibility gives them a chance to actually assess the market. From day one, we always said, Sean, this is a demand shock. And it's going to be resolved through demand reviving, hopefully. And a lot of it's already in the market. We've seen jet cracks improving quite substantially. Hopefully by 2023, we'll be back where we were in 1919.
I mean, one of the other good things I think about the agreement ultimately is that it gets away from these kind of distracting headlines of, 2 million barrels a day of increase, or 5.8 million barrels, which is the headline in the new year of 22, and just gets into this, now incremental 500,000, what's next month? And you're not dealing with these big sort of signature headline numbers. But Laury, most importantly, back to the East Med. Our friend, Mr. Erdogan, seems to want to be friendly with everybody. What happened? Did he have a conversation with his mother and she gave him the naughty finger, go make some friends? What's going on?
Well, it's not that friendly.
No?
It's poisonous friendship, I guess. So what is happening is again, Turkey is continuing with the implementation of its blue homeland doctrine, which is to take the most they can from the East Mediterranean in delimiting their economic exclusive zone. So the same approach they used with Libya, now they're using the same reading, the same understanding, the same methodology in drawing the EEZ with Israel. And that will make Cyprus and Greece very angry. So I think what about
Lebanon?
Lebanon has all its own problems. They don't have even the luxury to think about that. But maybe next will be Lebanon in line, and Syria.
But Lebanon has been negotiating some maritime borders with Israel as well.
Yes, we were doing that. And as I explained previously, this was politically motivated. It was a gift by some political parties here in Lebanon, a gift to Mr. Trump, hoping that he will be re-elected. Now that he is not re-elected, and they're pretty sure that Biden will take over, you see that the negotiations were postponed. They said it was for technical reasons, and they said we might meet again before Christmas, but I don't see that happening. And after January, I think everybody will be waiting for Biden. So going back to Turkey and Israel, I think one important thing, it's not what Turkey is proposing, how Israel will react to this proposal. Because Israel today is very happy with the alliances that it has in the region with Cyprus, Greece, Egypt, and by extension, UAE in the East Mediterranean. So I don't think that this is a very interesting proposal put on the table by the Turks. And the other point is today, Israel is very focused on its peace deal with the UAE. And this Turkish proposal will not be seen positively by the UAE. So therefore, I think it will be disregarded by the Israelis. Today, what's happening, it's very interesting with the Israeli UAE peace deal. They are focused on that. They want to strengthen that. And I won't be surprised if suddenly we start thinking about, should this East Med gas, instead of focusing on going to Europe, and with Europe being really green and aggressively green, should it go to Asia and maybe through the UAE and Saudi Arabia? So that might be something that the Israelis and the Egyptians, Cypriots, might start thinking of it. So
what is it about Erdogan or about Biden's arrival that has Erdogan looking to get friendly? What's the bigger geopolitical picture?
Look, Biden is not. He won't be having these phone calls breakfast calls or lunch calls or whatever calls with Erdogan. And I think it will come back to the institutions again, because with Erdogan and Trump, it was all like personalized politics, foreign policy, and it was not through institutions. Now with Biden, it will be more institutionalized, and it will be more critical, because Biden does not like the Erdogan's, like, if you want, aggressive maybe approach in the region. So I don't. This proposal by the Turkey is, like I said, an extension of this implementation of the Blue Homeland doctrine that they have, that they want to take the most they can from the East Mediterranean and take the biggest part of it, and disregarding any effect of islands, being it like Cyprus or being like small islands close to the shores of Turkey. So again, Mr. Erdogan, like putting another
Uncle Erdi to all his Mediterranean neighbor friends. Let's go to the survey question and get a bit of the mood of the room on the topic of the day. Do you expect OPEC Plus to pump more than the agreed 500,000 barrels a day in January? I.e., will we start to see slippage in this agreement? Despite the 108% compliance, but in January, do you expect OPEC Plus to pump more than the 500,000 barrel a day? That's the question for the room, and we'll look forward. Leo, the week ahead, obviously we've had the OSPs come out in the last 24, 48 hours. Been a bit tough on Asian refiners with higher prices on Saudi OSPs. I'm wondering how that will be absorbed in Asia by the refining community.
Well, I think will be more of what we've seen in the last few weeks. Refining margins are low. Running rates will slow down, further slow down. I think outside of China. And the only relief will be from China itself with more imports. So that I don't see big changes in there. But one thing I like to mention, reacting to Laury, but on the Israel and UAE, that Israel is really focusing on the UAE. Tony Quinn just mentioned to me that EAPC, the pipeline company, just this morning got approval to build an additional 2.5 million barrel storage in anticipation of the crude volumes from the UAE. So they are really enthusiastic and positive about that relation.
Yeah, and the tourism, apparently lots of hotels in Dubai enjoying flood of tourists from Tel Aviv. Adi, the week ahead, from what you think will be, we've come out of 4 weeks of rising oil price markets. I'm wondering, is this the week when we kind of sober up a little bit?
Yes, we are certainly seeing that already. I think we're seeing a bit of a consolidation, and the market is taking a bit of a breather after a very, very good run. I mean, all the macro situation is looking good over here. FTSE is back to well over 6.5. Shell shares are back to 1,400, believe it or not. So things are kind of looking up a little bit.
I mean, they're looking up, but nonetheless, California is shutting down, one of the world's biggest economies.
That's absolutely correct, and we also saw some news coming from California in terms of driving. I can't remember all the details, but certainly, you know, the sort of demand on gasoline in the second biggest, or is it first or second biggest states in terms of driving is definitely not particularly bullish. At the same time, you have a rig count. On the other hand, on the macro picture, we've got this we are very close to an agreement between the Republicans and Democrats on the stimulus plan. So I think that could, on the other hand, have a very positive effect going into Christmas.
I mean, you will have, obviously, on the sentiment side, but I'm wondering where sentiment and real demand come together. It seems like we're still kind of caught in a canyon between the two.
Well, it's you know, that's been quite a big topic of debate in the oil market in the last couple of months. I have a fairly strong views about it. I mean, I don't think the market is actually being decoupled. What happens is that when you have positive views forward, the front curve wants to go up, and then, due to sort of basically simply theory of storage, the front end picks up. So, I think the market is functioning very well. $1 trillion of fiscal stimulus will certainly be very, very positive for the market, because that's the money that comes right into the pockets of the people right away, and actually makes a lot of sense. And we need a lot more of that at the moment.
And it very quickly makes its way into Amazon's pockets by the looks of it. It doesn't stay in Joe the plumber's pocket for too long. But Adi, I know why you're up this early this morning, not for a good coffee, but to get your vaccine. Today is the day in the UK when you can get a vaccine injection. Is that right? It's the first in the world, and off you go.
It's the first day. To be honest, Sean, if I could get it, I would get it right away. Obviously, it's going to high priority people, and I think my wife's going to get it very soon. She's a doctor, and I think she's likely to be the first one to get it. But yeah, that's
a guinea pig for you to have in the house, right? It's like,
absolutely, I'm sorted.
If she grows an extra arm, you'll know to maybe hold back for a few days. Go for the Russian one instead, maybe.
Sputnik.
Sputnik 5. But nonetheless, a big day, and hopefully it turns out to be a significant success. Let's get the survey result in before we give Laury last word today and see what the room is saying. Do you expect OPEC Plus to pump more than the agreed 500 in January? 58% yes. I suppose the big question, if you were asking a second question, which I was tempted to do, well, how much? If yes is the answer, and I suppose how much more? I think generally the theme is we've got to probably expect more and more slippage as we move into the new year and prices go north of $50. Laury, the rest of the week, what do you think you'll be watching? Of course, America continues to offer entertainment, at least on the election. Apparently, tomorrow is the last day where Trump can derail the election, and apparently has audience with the Supreme Court.
Well, for us, like, we're just watching what Trump might do, like, in the region. Like, every day we woke up with a new disastrous plan, or I don't know what. So I think, like, they should, and it's really, like, funny, like, how is it that possible a president that has lost elections still has power until he gives away his power? So that they should change that, since they always interfere in our politics. Maybe we should tell them what to do as well.
I think we're all learning the shortcomings of the U.S. democratic system. It clearly has some weaknesses in it.
True. So what to watch for next week? I guess, like, one thing that I read this morning at 6 o'clock when I was looking at the news, it's like Pfizer had just announced that they cannot provide the US market with big quantities of the vaccine until summer 2021, because the vaccines had already been taken by other countries, or like, so I don't know what that will mean for the American for the US market and US economy, but that was something. So I think, like, still for us is to look at all these news about the vaccine, about how effective the vaccine is, who's taking the vaccine, and if this will really lead to like growth and economy, or just opening up the economies, or just like to go back to something normal by 2021. But I think everybody's ready to get rid of 2020.
Get rid of 2020. It does strike that you'll probably have one or two hiccups with the vaccine. I suppose it's inevitable. Distribution to billions of people is always going to be a bit of a challenge. Halftime talk this week, we've got our regular commentator, Peter McGuire, having a reflection on the year past and the outlook for the year ahead. Well worth a half an hour when you have it. We're continuing to build up for our forum on January the 13th. You've probably seen some of the sessions pass through being promoted on this call, so just pay attention to that. We'll start publishing the agenda hopefully this week, but we're going to be basically going around the world in 12 hours, with 3 hours from Asia, 3 hours from the Middle East, 3 hours from Europe, and 3 hours from the Americas. So it'll make for a pretty interesting day. Outlook for the year ahead. So plug it into your calendars. That's a wrap today. Thank you, Leo. Thank you, Adi. Thank you, Laury, for your time and your insights this morning. Really appreciate it. We'll catch up with everybody later in the week. All the best.
Thank you. Bye.
Bye-bye.
Bye-bye.